Hello guys, hope you're doing well. Today I'm gonna speak, I will say a few words about property valuation. So the step number one, whenever the person buying a property with a mortgage in Dubai, so this step number one is a pre-approval. The step number two for the mortgage process will always be a valuation. Let's say you got your pre-approval, you went to find a property, you found a property, you signed Form F or so-called MOU, right? So after you sign Form F, you need to inform your banker saying that you already found the property. So the banker will ask you documents like title deed, floor plan, owner's passport, and so on. After you give these all documents to your banker, he will arrange a property valuation for you. So property valuation is the process where the bank will just make sure that you're buying the property right in the price, that it's not overpriced property. So there are three possible scenarios that can happen. So scenario number one, the valuation can be higher than the price you agreed to purchase a property. So in this case, you will still get 80% of mortgage as the highest amount in case if you're a resident from the purchase price. Scenario number two will be when the valuation will be equal to your purchase price. So in this case, again, you have nothing to lose. You're gonna get 80% if you're a resident, 80% as a home finance from the purchase price. So scenario number three, which is the most unfortunate, it is when the valuation will be lower than your purchase price. Let's imagine you agreed to buy a property for 3 million. So after the valuation, then the valuation report stated that this property value is not 3 million, but 2.8 or 2.7 million. So in this case, you will need to add the missing amount from your pocket by increasing your down payment. So you can use your own savings, or you can ask money from your friends or from your family members. Or else you can try to renegotiate with the seller, trying to meet somewhere in the middle, let's say 2.8 or 2.9, for example. Or you can request bank to do another valuation. But keep in mind, this will cost you money because the valuation amount, the price for the valuation, it varies between 2,500 up to 3,500. So, and another way for you to go would be to cancel and try to find a property that is lower in the price. So the bonus tip will be, make sure that your real estate agent will go to the valuation process, and real estate agent will have to sell the property to the valuator. Because how valuators are checking the market value of a property, they will simply go to one of the tools that shows the market transactions, so like Data Finder or Property Monitor and so on. So they will check in the system that in building, let's say Marina Tower, or like in building X, the property with the size, for example, 2,000 square feet, this property was sold for 2.8 million. Then they will check another transaction where another property with the size of 2,000 square feet was sold for 3 million, and they will try to find the average. However, keep always in mind that the price can differ, can change from the floor, high floor or low floor, or depending on the view, or sometimes size can remain the same, but there will be additional maid's room in the apartment. So that's all important details. So that's why I highly recommend a real estate broker to be present during the valuation and to explain and to sell the property to the valuator. So all the valuation reports will be matching your purchase price. So hope this was helpful for you. Thumbs up, subscribe, and have a great day.